What up, traders? It's Matthew Mickey here, and in the last few videos we talked about a couple of things. We found the economic catalyst to kind of foresee the next quarter. We talked about seasonality, commitment in traders hedging, and then the news drivers that are leading to catalysts in the crude market and the oil market. Then we dug down in video 2 on what industry KPIs and catalysts were, and then we found the outliers, the sub-industry group that we want to get into. And so my overall projection was, long story short, yield's going up, crude's going up, dollar and ES going down, right? But then my boys at Market Radar, and I don't get paid by them, they do the same thing I do. They establish really dope free material, so check them out. I don't get paid, they don't get paid by you, so you know, that's that. It's the community that are trying to help retail, you know, and teach people how to follow a system and a process. They focus on economics and ETFs. I focus on futures and digging into individual companies. So this is the phase where we dig into the quarterly earnings reports, the annual earnings reports, and we dig into the actual companies to find the KPI and catalyst. But we also want to identify the risk that we found in the quantitative analysis, right? We want to see why that risk is there, to see if it's even worth moving forward, right? But before we do that, let's talk about the risk that Market Radar Gaming already brought to our attention today. And I won't do it justice, so just go watch the video. They'll do a lot better job of it. But the one thing I learned from them is that the bond market has the money in it, right? It has the wells in it, and it tends to lead things, right? And so what they noticed, since, like right here on the screen, you can see that the green indicates crude oil on the weekly chart. The red indicates, you know, long bonds. The bottom row is the inflation rate year over year, and then the lower yellow row is inflation rate month over month. And we know that the bond market, you know, when it moves, is telling the story of what the rest of the market is going to do, right? Because that's where all the billionaires play, right? And so we saw that, you know, there could be a possibility that the bond market is signaling us a peak inflation rate, right? However, there's no signal right now that inflation's peaked, right? This is just something to consider for tomorrow's CPI's number, right? And we can see that crude oil has been dropping. And we already knew this was a risky play and one that I don't usually take, but, you know, everything's at such a discounted rate, I had to shoot my shot, right? So with that being a concern, right, so the way it looks like it might play out if it goes this way, right, is that, you know, CPI number comes in under print, right, it's showing a bigger drop in inflation than forecasted, and what that's going to do to the equity markets, everything will go bananas, it'll feel like we're ripping, you know, like YOLO stonks, and then it's going to be hold on for dear life, because what's reality is the Fed Reserve's got to keep inflation rates higher. Eventually, we'll go into deflation. Maybe that'll be end of Q1, going into Q2, like all the investment banks are projecting. But either way, like tomorrow will be the day to tell me if I'm even going to put these stocks on my watch list or whatever, or if I'm going to be looking for an entry, right? And that's why it's good to have people who don't think the way you do, because like they always have your six. So, Gamer, Artie, thank you. And moving on. So in the last video, we did a quantitative screen to get us into the sub-industry. We found the catalyst, and now we have to find the company that is the outlier within the sub-industry, right? And we checked out the forward-looking indicators, PE, EPS growth rates, revenue, PEGs, and then we checked out the balance sheet, the income sheet, and the free cash flow yields to make sure that those projections were solid, right? We checked out to see what the quants like, and then we also checked out the boxes that what the 3 to 5 year investors like to see too, right? And there's a lot of strong companies in this sub-industry, so I'm going to take another step to really narrow down like what company I want to like break down KPIs and catalysts for. So first and foremost, when you go to figure out what the industry KPIs and catalysts are, you probably should pick the strongest stock and listen to their earnings call anyway, just to figure out what the sub-industry's KPIs are and what they're showing. It doesn't mean you're going to trade that. It's just like, why not choose the strongest stock, figure out what's making them the strongest stock, and then look for those same criteria in the stock that you're trying to play. And so these are the 3 juicy stocks that I found from the quantitative analysis. You got WHD, VAL, and FTI, right? So here we're going to check out the relative strength and the volume on the weekly and the daily chart for these companies. So we can see that WHD has the most volume flowing to it. We can see that WHD has the biggest monthly change to it. And we can see that, you know, now we're going to look at the relative strength of the company, of the industry group over the S&P 500, and they all look good. But as we can see, WHD looks great, but they're all pretty similar. So I'm going to just say fuck it and figure out the KPIs and the catalyst for each company because, I'm not new. This is a new sub-industry group, so I'm going to learn and we're going to compare and contrast what's going on, right? So me and my boy Saeed went through the Schlumberger earnings call, right? And that was because they're the biggest company in this industry group, and we wanted to align to see if their KPIs lined up and what their catalysts were lining up with what we pulled out of the industry KPIs and what we pulled out of the economic KPIs. And as we can see, while we got in this industry group, global offshore activities will continue to strengthen. Remember, that's like the geopolitical offset that's going to force the oil companies offshore like that. Reservoir performance increase, higher intervention to active inland and offshore. That lines up. And then the subsea market outlook is very constructive according to McKinsey. Remember, we read that. So project mobilization trends in Brazil, Norway, looking good. Colombia offshore gas is promising. Africa and Asia are showing strong activity. So just from that, we know that that's one of the KPIs and catalysts that we're looking for with the individual companies. Margin expansion, the higher offshore activities. CapEx will focus on well construction and reservoir performance, right? The next leg for growth is in offshore and Middle East expansion, right? So boom, now we have enough to look for when we do a company KPIs to figure out what the industry group outlier is. So after going through all three earnings calls and looking at what each company said at the energy conference that just happened a couple of weeks ago, I didn't like WHD because they're not trying to commercialize until 2024, and they're mostly they're booking orders for equipment into the Middle East and Africa. So that'll be a catalyst, but it's not what I'm what I'm trying to target, right? The more focus on rented rigs additions for Q4 into Q1. With FTI, they don't really have any exposure to the Middle East, so all in all, I decided to go with VAL, right? And here's why. I do KPIs for a company and catalysts for a company. They have to line up with the tailwinds that I pulled from the industry and from the economy, right? So here are some of the tailwinds I've discovered in the VAL. Here are some of the KPIs that I discovered in the earnings call for VAL, right? So one of the tailwinds was offshore drilling due to political instability in North America, which came from our economic and industry catalyst. Well, Various recently was rated the #1 offshore driller in Energy Point research, and the future catalyst I want to see the Norway contract start picking up, and they're already projected to increase CapEx in this coming quarter. One of the tailwinds was China opening oil demands from Saudi Arabia. All right, as we can see, Various owns 50% of the joint ventures with Saudi Aramco, the world's largest jackup. I'm going to be paying attention this quarter to see more payments for drilling, and from the new builds from Saudi Aramco. Another tailwind that we pulled from the industry catalyst is that the Middle East and Brazil will be key locations in 2023, and that came from listening to the Schuberdijk earnings call and what the company did on the jackup side of business. We have seen a meaningful increase in activity since the start of the year, primarily driven by increased demand in the Middle East. So I'm going to see increase in floating and jacking adding to the operational revenue. McKinsey said that 2023 will be when offshore drilling finds a bid. If we look at the company, it has the largest modern fleet on water with the least amount of equipment needed maintenance. And not only do they have the largest fleet, but they have the most mobile fleet. They can move anywhere in the world to drill, right? So whenever they pick up a contract, they can just grab it, right? The catalyst I want to see is fleet management and fleets under maintenance in Q4 to pick up contracts when they come out of maintenance and pick up contracts in the Golden Triangle. So I'm going to do another video on the volatility and the short that I'm going to hedge this play with tomorrow. I'm hitting the 10-minute mark, so I don't want to go over that. All right, guys. Later.